Hi, let me use a couple of stock to explain the chart reading, what I learned, okay? So if you remember in my note the past when Google was at this stage, I was saying that the trader actually are changing hand because now it's at all this moving average part, which is the bear is decided they don't want to stay with the bull. They don't want to stay with the stock. And for the bear point, from the bull point of view, they think actually this is a pretty good time to get in. So they take a bit of time here doing the trading. So the money is the stock is changing from the bear to the bull, bear to the bull, bear to the bull. So usually how do you observe that? If actually it did not keep going lower, you know that actually is going on. Then you start to try to identify where will be the breaking out. So see here, give you a little bit breakout, and now it finally break out, and this is finally breakout. Okay, so that's Google breakout. So then actually, because I see through that, so I actually take the advantage of that. So actually I make good money because I was here. I just hang tight to do that. If you have that kind of idea, so you can do it. But what will the bet I'm doing now, doing then is that if actually is start to close before the T, before the MA50, then my bet is wrong. Then I will take loss, okay, with whatever I have. But end up I was right, so it's going higher. And this is one example to learn. If you start to identify that, then you look at that. You say, okay, if I stay with that, and if my guess is wrong, then how much I will lose. If you feel that the loss you can handle, then that's fine. See, I actually at that point, I actually make a alert here to say if you go lower, I need to be careful. That's my alert there. Okay. So this is the first one. Okay. Then what do I want? Why do I want to bring this up today other than just show you how to identify those? The other thing is that if you see here, this one go in here, then go back, consolidate, and go again. Now you can see that it actually consolidated a little bit here. Then yesterday I was discussing about this trading range, and yesterday break out a little bit. Then today actually it's decisive breakout. So what do this mean? Actually, this is going to be one wave. Then it's consolidate. Then this is the new wave to going higher. According to the statistic in the past, when you have this, there's a good chance the price from this range from here to here is possible. Let me try to change this here. Okay. So look at the range from here to here. It's possible the next one will run that much higher. So let's do a quick calculation. Let's call this 1650. Then here is, let's say 4050. That's 200 points. So it's possible you will see Google go another 200 points. Maybe the goal there. Of course, no guarantee there, but it's telling you it's pretty high probability will go higher. Just do whatever you want to do and don't trust me completely because I don't have a crystal ball, but this is how I learn. So I share some of this with you, okay? Now let me use a couple other stock to explain something to you. Number one, probably the thing come to everybody's mind is Tesla. It's going so much higher. So I think the attention or the intention of a lot of people probably say, if we pull back, I'll buy so that I can go higher. Is possible, but I'll tell you something for you to think about this because Tesla actually announced that yesterday they are going to sell $5 billion worth of the stocks. You know that when they sell that much of the stock, they are not going to just sell one day. So usually what they do is just like any other money manager. What they do is that they will say, okay, I need to sell that much of the stock. Then they actually to identify a range of the stock. When the stock reach that point, they will sell it. But once it go below their goal, they stop. Then they wait for the price to go higher to that point, they sell some more. So essentially what this is going to do until this $5 billion stock was sold, you will see that we will be able to identify in the next few days or weeks, we will see that where is their range they want to sell. So what is the lesson from here? Be careful now, okay? Because probably for a period of time until those $5 billion stock was sold, it has limited upside. So this is how I learned from that. And again, I don't have a crystal ball. Let's see whether what I learned actually apply to the stock today. Okay, this is the second one. Then there are a couple of the stock. Let's go over that. Okay, let's look at the APPS. If you look at the APPS, actually this had a pretty good run. Actually, this good run is because of this earning apparently. So if you have not learned this yet, I will repeat again. Whenever you see a big gap, get ready for the stock to go 45 degrees. So this is a good example showing that actually it's 45 degree higher. So actually it has a good run. Okay, of course, when you see this right away, you probably don't want to get in right away. If you get in right away, make sure you have your stop loss here. So because if you go below here, meaning the people are not trusting this price. So you don't want to have this go all the way down here and incur big loss. However, it's established here, so it's going higher. So let's assume you have that ability to get there. Then you see this shooting star at the oversold area. Then the next day going like this is the time to go. So you go, and one more lesson is that whenever you sold stock, do not say that, okay, after I sold stock, I don't want to look back. I learned this until about almost 2 years ago. Before that, that is what people taught me. Says, if you sold a stock, don't look at that for some time, or else you will feel regret that it change your opinion. That's not the way to do that. Actually, you need to follow that and be very objective to decide whether you want to go back or not. Or else, after 3 months, let's say it's going like this and start to go higher, then 3 months from now, you'll say, oh my God, I sold this here, but it's go back again. I missed that run. So that kind of advice, don't take it, okay? Now, what is happening here is look like a J hook, okay? Actually, before this bar coming out, looks promising, probably will go higher. But what do you want to play this? If you want to really play safe, you need to wait until this go above here to get in. If you actually try to go here, what the end result will be. The gain is higher risk, higher gain, is higher probability to gain, but it's also higher probability to lose. Okay, then sure enough, today happened like this. Okay, so what are you going to do with this one? This is scary. Okay, because this chart tells you at the open, this open higher actually is confirming this, make you feel pretty good. So let's say you just decide to go in right away, but if you look at the chart, you will see that it start to, after the open, it start to go lower. So this, when you do a stock like trade stock like today, okay, this is another point. So actually, I just did not realize I'm going to convey so much message. Okay, today is at the consolidation day. Consolidating day is actually, you need to have a little bit more attention if you have attention to trade, because consolidation day can has a big swing. So if you actually decide to say, okay, if you're going higher, I'm going to buy it, which means that you need to have a good time to follow the market. And if you see that it's start to go below here and go below half, you want to get out. So if based on that, doing this chart, if even you get in here in the middle of the day, you probably should already get out, or as soon as you get the trade, you should set the stop loss here. So with that said, however, if you actually have a little bit longer term, I hope I'm not confusing you. Actually, there's still a possibility this will close above here and actually close higher, because today, like I said, today is consolidation day. So it could still go higher, actually become a positive candle. You never know, okay? So I think if you are not somebody like me, keep watching the stock market during the day, then you probably should not trade this today. Or you start it as soon as you sense that today the nature of the market is like this, you just decide to close all your spike order and just stay out of it, okay? Unless you do feel that you have time to follow the market, and also you feel that you do have enough knowledge to handle the quick change. So this is a APEPS. So in summary, I cannot tell you whether to buy or stay. My teacher says you can stay, but when he says stay, I think he's addressing to those people who have enough knowledge of the candlestick and also have time to follow. That's this APPS. Okay, so let's look at AMRC. Let's see what we have here. So AMRC, kind of like that, right? Actually, AMRC in the beginning of today actually fulfill the criteria. This go up and pull back, consolidate, and forming the J hook, and actually open higher. So this is definitely, you should get in if you want. You are brave. But however, like I said, today is consolidation day, because yesterday are the high. Then you probably today you have to say, if I want to put in any trade, at least the first half hour to 1 hour, I need to have time to watch it and react to that. If that's the case, let's say you buy this here, you watch for next half hour or so, you will see that it's going lower below here, then you just get out. Or you say, I trade that, I get it, then you should just set a stop loss. Then you say you will not be suffering for that much loss now, okay? Or else, let's say you put in the trade here and you get it, then you go to work, then it get it, okay? Then during the day, it's just going like this. By the end of you look at it, oh my God, you lost 4 points out of 35. That's a pretty big percentage. So that's AMRC. Okay, let's look at a couple more. Let's look at CRM. This actually fundamentally is a very good stock, okay? And you can see this jump like crazy because it's good earning. So this one, again, consolidate, jump also open at the day, up, then start to go lower. So you have a decision to make now, okay? You want to say, do I want to use this to stop gain, or I want to do stop loss, or this want to stop? Either one will force you out during the day, okay? So again, if you actually sense that, or yesterday already, now actually this is a new idea start to form. I think if you are seeing the market near the index high, okay, all-time high, then you really have to say, if I want to go in, I have to have time to watch the market for at least half to 1 hour to decide how it played, then I will decide to get out. And also, you need to know enough about how to use the candlestick, and also you have learned about the psychology, because if you don't know enough the psychology, just teach you when that goes, once you get it, you will keep tell yourself, maybe I should hang up more, maybe I should hang up. See, for this example, you hang in there, you probably will be fine. But the one we just see the AMRC, if you hang in there, you probably will feel sorry, okay? So this is the CRM. Longer term, I do feel CRM still has a good chance. Actually, today probably it will just go back high, go back up, okay? That's my guess, but I can be wrong. Because it could be, today some news come out and the market just sold off. Because you also have to remember, when you actually reach the all-time high, traders are waiting for excuse to take profit. So if Trump tweets something, or China did something, or Russia doing something, that will be the excuse. Then before you know it, the market sold off so much. Okay. So this is, but in general, I'm not telling you it's going to happen, because in general, I think it probably will not happen. Okay. Because I think if that happens, you will see Fed come out to do something. But don't bet your money on that either. Okay. The most important, other than I keep giving you some suggestion, one more important suggestion I have for you is that never risk your money from one idea you think that will help you to make a lot, then you take the risk. Never do that. Okay. Now look at the AMD. AMD actually is in my Midas Touch. Okay. I actually got in yesterday. I'm pretty happy. But now look at that, what is happening now. Okay, this actually is pretty bad. Okay, open high, I'm so happy. Then now it's at here. Actually, no, yes, now it's pretty much here at the 1933. Okay, so this can be bad, right? But I do have my alert here is a T line. If it actually start to go below T line, close below T line, I probably have to consider to get out. Okay, but I feel that today is the consolidation day, so now it's just seeing the profit taking, so it's probably okay. But since I only have $500 on this, if this loss is lost, okay, so that's fine. So these are a couple of the stock I just reviewed for you. I hope this will be helpful to you. Okay, thank you, bye.